very well, thank you. All right. I am very, 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 very sorry, guys. Those calls were very important. Um, we, as a firm, all right, EasyFX, we're in the process of going digital. All right, we have some software that we're putting together to make trading a lot better for you guys. All right, and in order to ensure that we cover all our bases, the patents is intact, the NDA agreements with all of with all of our technical partners, and the entire legal jargon. All right, so to ensure that all of that is intact is the reason why I needed to make those calls. It's and I didn't want to postpone it because if I should miss the conversation right now, coming back to it might be a problem. So, guys, I am really, really, really sorry. I hope you guys have forgiven me. Please let me know that you're forgiven me, please. All right. So, first thing we're going to be starting with today is we're going to be talking about market ratios. All right. And the reason why we're going to be talking about market ratios is because I need you to understand that the market is not random. Okay. Because markets depict what you see as price action on the chart simply is a simple depiction of the decisions of humans. All right. Creatures like yourself and myself. That is literally what you see on the chart. So it's not some random motion that is taking place. All right. And if that is true, it means that the market is predictable. One. Two, it means that to a large extent, a very, very large extent, all right, the market is repetitive. Because, for example, you as a human know that there are certain things that you do occasionally as an habit. All right. For some people, it is that they wipe their noses. For some people, it's that they tweak their ears. All right. For some people, it's that they just smear their eyebrows like this. So there are things that you do repetitively, all right, as an habit. So the same thing happens in the market, and that's why movements in the market oftentimes occur as ratios, all right, of each other. All right. So whatever move the market is going to make tomorrow, next week, next year, all right, is most likely going to be a ratio of something that the market has already done before in the past. All right. So, having stated that, the next thing we need to understand then is, how do I find out what ratio of the market is going to be repeated tomorrow? All right, if the market has done this today or this week, all right, or last week, how then do I know, all right, what the market is going to do next week or tomorrow? With me, how do I find the ratio that applies for that particular thing? All right, and this is where we now start to talk about numerical progressions. All right, please hold on. Don't assume that we're going to get so technical that I'm going to start giving you guys plenty grammar or plenty mathematics and formulas and calculations. No. All right. But I want you to journey with me logically. All right, I want you to travel with me logically. So say, for example, if yesterday you were able to eat 2 bowls of rice, all right, 2 days ago you were able to eat only 1 bowl of rice. Statistically speaking, all right, based on the fact that 2 days ago you were able to eat 1 bowl, all right, but yesterday you were able to eat 2 bowls. Statistically speaking, if I tell you I am coming to your house to eat rice, all right, how many bowls of rice do you think you will be looking at preparing to welcome me? So 2 days ago, 1 bowl. Yesterday, I was able to eat, 2 bowls. All right, so if I'm coming to visit you today, how many bowls of rice are you going to be looking at preparing to welcome me, to host me, to entertain me? I want to see your comments. I want to see your responses in the chat box. All right, that's literally why I'm asking you guys. So just type in the chat box, oh, this is what my expectation is. This is how I think it's going to go. All right, and then we'll move on. 3 bowls of rice, because that's logical. All right, and that's arithmetic for you. Are you with me? But let's think about it like this. If 2 days ago was 1 bowl and yesterday was 2 bowls, it simply means that you can either say that I added 1 bowl of rice to what I ate the next day, all right, which means that today I'll be eating 3 bowls. Or you can also say 2 days ago was 1 bowl, all right, and then the very next day, that 1 bowl was multiplied by 2, making 2 bowls, which also now means that today I might most likely be eating 2 bowls of rice times 2. All right, 2 bowls of rice times 2, that would mean 4 bowls. So one is the geometric progression of things. One is the arithmetic progression of things. Do you get it now? But before we go into all the mathematics and all the mumbo jumbo, let me show you something interesting. This is something my students have always loved seeing. All right, so I'm about to show you guys that too. So I'm going to use an arrow. I'm going to draw an arrow from the start of this swing to the end of this swing. All right? And then I want you to watch what is going to happen right now. So you realize that the very next swing that market made, all right, was almost exactly the same as this particular swing that we started with. All right. Then if I also then mark this current move, all right, that started from here, it means that we can project that the market is probably going to move all the way up here. Are you guys seeing that? And that is the first thing that describes market ratios. Then at the same time, if we also look at what has happened in the far past, all right, which is this swing, you'll see that from the bottom of this swing here to this point is almost exactly the same as what it took from here to here. All right. So there are times when the market makes moves that are 1:1. All right. Sometimes it makes moves that are 1:0.618. Sometimes it makes moves that are 1:0.762. Sometimes it makes moves that are 1:0.826. All right. Sometimes it makes moves that are 1:0.5. All right. Sometimes it makes moves that are 1:2. So all of these things happen. All right. Those ratios are repeated like that. So the simple way to do your analysis, all right, that I'm going to be showing you today when it comes to using market ratios, all right, is how to find key zones or key levels based on this simple principle. All right, how to find key levels based on this simple principle. So let me quickly show you something that is most likely going to look like a cheat code. This was a retracement that started from here and ended here. Is that correct? Now, I'm going to show you I'm going to tweak certain things on this Fibonacci, all right, that you guys are going to start to wonder, how did that happen? Let me see. Let me see. That's 1.272. This is 1.618. Good. This is 2. This is 2 point. Hold on. Okay, that's not there anymore. But look at this. All right, look at this. So this was the retracement. All right. Remember, this was the overall move. This was the swing from here to here. All right. And then after that, we saw price retrace. And this was the retracement from here to here. All right. So if I buy from here and I'm trying to figure out where is price going to reverse from, all right, where is the likely target for this new swing, I can draw my levels, all right, based on the Fibonacci retracement of this swing, all right, this retracement from here to here. And when I do that, it's going to show you that, all right, this is the 61.8, which is one of the targets. All right, this is level 1, which is another one of the targets. All right, so you see that when price got to the level 1, you see that there was a tiny reaction. When price got here, all right, or when it almost got here, you see that there was also a bit of a reaction. And right now, we saw that price almost got here before it did a big return to the level 1. All right, so that is one way to use market ratios. Another way to use this would be to mark the swing from here to here. Hold on, I'm not teaching yet, all right? I'm just flexing my muscles a bit so that you guys can get, in an anticipatory mood. So when I plot the Fibonacci from here to here, all right, you discover that after price broke above this high, just watch, after I broke above this high, it got to a level, this is our first target, all right, this is our second target, which means right now if GU keeps going up, all right, I expect that my third target will be somewhere around here. Somewhere around here. Why? Look at what happened when price got back to this level here. You see that there was a reaction, a strong rejection before price finally came to break it. So why am I showing you this? In trying to look for entries on the lower time frames, or you're trying to just find trades that you can take, all right, one way to go about it is to go on the daily time frame, all right, and then split what's going on the daily time frame into different price points. All right, you can split it into different price points. I might not go into detail on some of the things that I do right here now, all right, because this is a free mentorship session, but I'm going to show you some of the tricks that I usually apply. So look here. That was an overall swing on the daily time frame. All right. And when price had gotten here, it came back, used this as an entry. And you'll see that when it got to, let me show you this quickly. When it got back to this point, all right, let me show you. We can go to the 1 hour time frame. This is the level that got broken, all right? This is the level that got broken. So we can simply come to the 1 hour time frame. You see, this was the first initial move that broke above it. Price returned to the demand zone, all right? Returned to this other block. And you see the push, all right? Then we see that price broke above it all again, all right? And what did it do? It still came back for a retest here. So typically, if I was looking for an entry, I would just wait for price to break one of those levels and come back for a retest. Break one of those levels and come back for a retest. That way, you have a lot of, positions that you can take as the day or the week progresses. You can do the exact same thing on the 1 hour time frame, the 4 hours time frame, but always understand that whatever time frame you're doing that on, all right, you're definitely going to need to go to the lower time frames for your entries. All right, for those of you who missed my Monday market stream yesterday, I am begging you, please watch that stream, especially the first about 25-20 minutes of that stream. There was something really crucial that I thought in that stream that you guys are going to need. I was teaching them the ECTs, all right, which is also called the entry confirmation techniques, all right, ECT, entry confirmation techniques. Please watch it, all right. We talked about the double break of structure. We talked about the break and retest of the trend lines, all right. Those are two very crucial things that if you don't have it, getting lower time frame confirmations is going to be extremely difficult for you. And I mean extremely difficult. All right, so please watch that so that you can get a lot better at your trading. All right, so which means that here, this was one of the levels. All right, look at it. Price broke it. And what did price do next? It came back for a retest and then went higher. All right, went all the way up to break another level. All right, and after breaking this other level, we've seen the break and the retest, which means that if GBP USD continues going up, all right, look at it. If it keeps going up and then it breaks above this level, all right, we're simply going to expect it to come back for a retest and then keep moving. Does this make sense, please? Does this make sense? Please let me know if you guys are with me and if you're getting what I'm showing you today. All right. If it's clear, just drop a fire emoji in the chat box so that we can proceed. Let me see that in the comment section. Let me see that in the comment section. Not on the Telegram group, all right, not on the Telegram group, just right here on the chat box, okay? Do you guys get it? So we're waiting for, literally what we're waiting for is a break and retest, all right? We have our key levels that we're watching out for based on the Fibonacci. All right. And then what we do is that we wait for price to break and retest some of those levels. Right. That is when that is for when I'm trading with the trend. All right. I'm trading break and retest. All right. There's also now an approach of when I am trading the end of a retracement. All right. Remember, one thing we know about the market, all right, is that the market moves in waves. All right, and if you didn't know that about the market before now, all right, please know it. The market moves in waves. All right, I'm coming. Let me show you guys that quickly. So what that means is that in an uptrend, all right, an uptrend is comprised of a bullish impulse, a bearish retracement, all right, then a bullish impulse, and then a bearish retracement. All right. So generally, when market is bullish and then a retracement begins, the question on the trader's mind, a trader that knows that this is an overall bullish trend, all right, and being an overall bullish trend, it simply means that I am looking for buy entries. Okay. You're not seeing the screen properly. Let me see. Don't worry, let me make this thicker and then change the color. Oh, yeah. Is that clearer now? Is it more visible now? All right, beautiful. So the question on the trader's mind, right, is with this current movement that I'm seeing on the chart right now, all right, how do I know where the retracement is going to end? How exactly am I going to be able to select that, okay, this is the likely point where the market retracement is going to end? So the answer to that, all right, Mr. Ajala, I'm going to do that. So the answer to that is to learn how to work with the Fibonacci retracement tool. All right. So when I plot my Fibonacci from the low of that impulse, all right, that the very most recent low, all right, to the most recent high. All right, when I plot my trend line like that, my Fibonacci retracement levels like that. All right, let's zoom in. Let's zoom in. I want you guys to get the juice here. So there are 3 key points or 3 key levels that I am watching out for. All right, when I'm trading retracement. All right, remember, there are 2 things we want to do with the Fibonacci. One is to find out where the retracement is going to end. 2 is to be able to identify where the impulse is likely going to end. All right, so there are impulses, there are retracements, and on that basis, we can use the Fibonacci retracement for either of the 2. All right, so when I'm trading retracement, or when I want to know where a retracement is going to end, all right, the retracement has started and it's coming. You draw from the week, you use the weeks. All right, so when I want to find out where that retracement is going to end, what do I simply do? The answer is simple. 3 levels to watch out for. 1, you're watching for the 61.8. All right, level 61.8, that's the first level you're watching out for. All right, which is this one here, where the market is right now based on this chart I'm drawing. And then sometimes you would have the market to do something like this, right, and then return to either of the other two levels. The second level, the first level to watch out for is 61.8 or 0.618. The second level to watch out for is the 76.4 or 0.764. And the third level to watch out for is the 88.2 or 0.882. So let me just type that out on the screen. I'm going to have to make this very bold. All right, good. All right, so those are the three levels that we want to work with. All right, 61.8, 76.4, 88.2. All right, so when I have these three levels, what do I then do? What next do I do? All right, first things first, you must understand what an inducement is. All right, you need to know what an inducement is. And basically, what's an inducement? An inducement is a failed attempt, all right, is a failed retracement. All right, because let's imagine I want to trade from 61.8, all right. If price has maybe touched the 61.8 level before, all right, if it has touched the 61.8 level before, and then there was no fair value gap left, all right, it simply means that price is most likely going to go lower. What do I mean? I mean that if your fair value gap was somewhere here, all right, and this is your 61.8 level, it would mean that this move, this small move, already completely closed up the fair value gap. All right, it has completely closed up the imbalance, which means that price is most likely not going to go any lower. From that point, it could just start the big move. All right, but in cases where your fair value gap is located all the way down here, all right, all the way down here, and the move, the 61.8 move, did not completely close your fair value gap, you're right, it did something like this. What do? You simply position and wait for price to completely close the fair value gap first. All right, and then you just mark out the other block that is closest to that fair value gap. So please let me know if this makes sense. I need to understand if you guys got this. All right, before we go on to the next thing. All right, you guys, let me know. So let me just quickly drop this, all right, for those of you who might want to take this further and do some bit more research, all right, you can then combine the value from the ATR, all right, which is the average true range indicator, all right, you can combine the values from the average true range indicator with your Fibonacci levels, all right, such that if you have any of your key levels lining up perfectly with the value from your average true range, all right, either it's your average true range low or average true range high, once you get that, it gives you a lot more confidence, in that particular Fibonacci level. You guys get me now? All right. So you want to be able to understand that when a retracement is happening, all right, that retracement is not just going to end because it is tired. There are levels, there are areas where that retracement is most likely targeting a reversal. All right. Areas where that retracement most likely wants to get to before it turns back. All right. And the same thing when an impulse is happening. All right. When an impulse movement is happening, all right, you want to also understand that there are key points where that impulse is targeting. Are you guys with me? So say, for example, my impulse movement begins from here. All right. Where are the key levels that I want to target for closing my trade? All right. My TP1, when I'm trading this kind of approach, all right, my TP1 is usually the 23.6 level. That's TP1. All right. Once price gets there, I want to, just if I want to probably, take partial profit, all right, or I want to place my break even, I do any of that. All right. So 23.6 is the first TP level. Second target is the 0%, all right, which is the previous high. All right, remember, this was the high point from where the retracement started. All right. So usually when price gets back there, there's often going to be a reaction. All right. So that becomes my TP2. All right. This is my TP3, which is what? Minus 0.618%. I know that sounds crazy, but if you enter that into your Fibonacci, you're definitely going to get the value. All right. Minus 0.618. Okay, no. Minus 23.6. Yeah, that's the first one. 23.6. All right. And then the next one is minus 0.618. All right, or minus 61.8. Then you have minus 1, which is at which point your previous impulse and the current impulse are now 1:1. Remember we said market ratios. All right. So at the point where price gets to this, my Fibonacci retracement minus 1, at the point where it gets to minus 1, it simply means that the previous impulse, all right, and the move from this high to this point is already 1:1. All right. So right now, let me just show you guys a couple of examples from the chart. All right. So that you guys can see that what I'm showing you is actually very, very legit. So to make this more interesting, all right, you guys just type a commodity in the chat box so it doesn't look like I already rehearsed it. Just type a commodity in the chat box and then let's take a look at it together. You draw your Fibonacci retracement from an impulse, all right, from the impulse, so that it can show you where the retracement is likely going to end. Of course, yes, Dean, I do use my Fibonacci values on MetaTrader. So just give me the name of a commodity. Although off the top of my head, I think I will just do mini, mini, miny, more. Father has a donkey, mother has a donkey, mini, mini, miny, more. No, I won't do that. That's Euro USD. Don't want. All right, let's use GBP AUD. So oh really? This guy said Euro USD. All right, let's do Euro USD. All right, Euro USD. Let's do this. So Euro USD 4 hours time frame. Let me use the replay. All right, Euro USD on the 4 hours time frame, we can see that this previous high, all right, this particular high has been broken. All right, meaning that our impulse move is from this low, all right, to that high. All right, that's our impulse move that we're working with. All right, and based off that, this is our 61.8. All right, this is level 61.8. This is 76.4. All right, so let's play this forward so you see what I'm talking about. So you can see price begins to move. It's moving, it's moving, it's moving. It's approaching 0.5. Right, it's approaching 0.618. So see what happened. Come on, I already posted you. So I want you guys to see what happened when price got to this 0.618. All right. What's going on? Oh, it's on 10x. Hold on. I didn't get to show you guys what I needed to, so let's recap a bit. Yeah, take me there. That's where I want. All right, so this is where price is right now. All right, this is at 61.8. All right, and you discover that around here, all right, we have a kind of a range, all right, like a small consolidation. If you go to the lower time frames, I'm sure that it's going to be a lot clearer. All right, let's do the lower time frame, so you guys can see that there are no gimmicks here. One hour time frame. Let's look at you. All right, good. So this is 61.8. This is the level 61.8. All right. And I'm seeing that there is a solid order block here. All right. So let's go back to the 4 hours time frame. Hold on. Let me check the 1 hour again. Hold on. Whew. So we've marked the zone at the 76.4. This is the zone at the 76.4. This is 61.8. Beautiful. This is the zone at 61.8. All right, so let's go to the 4 hours time frame. All right, so this is the first zone. This one is at 61.8. This is the second zone at 76.4. Let us play it forward and then you see what happens next. All right, price comes into 61.8 and the zone at the 61.8. Can you see that? Entered that zone, and what happened next? Push. Now, hold on. Remember I told you that when I'm trading based on the Fibonacci, all right, it also shows me where my target profit should be. All right, it shows me where my take profit should be. And I told you TP1 is usually 23.6, which is this. TP2 is level 0, which is this. And I told you that TP3 is 0.618 level. All right, minus 0.618 level. So let's play it forward and see if price got there. Boom. Can you see? This is price reaching our final TP, which is around minus 0.2627. All right, and this is the final one at 0.618. So see, price got to minus 0.27. See, there was a reaction. When it got to 0.618, you're going to also notice a reaction. Do you guys see that? This is minus 0.27, this is minus 0.618, and the level 1, which is all the way up here, all right, oftentimes plays out as the final, most final TP. Do you guys get it? You guys get it, please? Let me be sure that we're together on the same boat. And some of you didn't jump out already. I sure you guys are with me. Good. Let me show you the basis for this current buy on GBP USD. All right. Previous high. All right. You can see that. Hold on. Let me show you. Previous high, you can see that it was that high that pushed price to break below this low. All right. So when price broke above that previous high, it means that we have an impulse. What do we do with an impulse? We draw our Fibonacci retracement tool. And what does the Fibonacci retracement tool do? It tells us where the retracement is likely going to end. All right. And what are the levels we're watching out for? 88.2, 76.4, 61.8. So this current buy on GBP USD 4 hours time frame is currently happening from, all right, it's currently happening from the 88.2% of the Fibonacci retracement. Do you guys get it? Of course, the Fibonacci retracement tool is a very easy way of trading. All right. Once you're able to combine it with, your proper market structure, combine it with your demand and supply order blocks. All right. Especially if you're now able to add in the simple touch of finesse, which is what I was showing in ECTs yesterday, all right, during the FBS stream. Because if I wanted to enter this trade using ECTs on the lower time frame, I could just go to the 5 or 15 minutes. All right, let's see. Let's do 5 minutes. Good. If I wanted to use ECTs, my regular ECTs for an entry on this particular movement, all right. In this case, I'll probably be using the double break of structure. All right, I'll most likely be using the double break of structure, which is here. All right, you can use this particular one. Break above that eye, break above this eye. Price returns to the demand zone of the very first break. All right. And then you'll be looking at entering from somewhere around this demand zone. Alternatively, you could also then wait where this becomes our first break. This becomes, the second break. All right. And then price returns all the way back here. All right. Price returns all the way back here. Now, remember what I showed you guys when we were talking about Asian range the other time. Dean, the Fibonacci retracement tool works on any time frame. All right. The only challenge is you need to understand how to find your ECTs on the higher time frame. You just need to. Otherwise, you're going to feel stuck with finding out which level in particular to use. All right, so here is my break of structure, break of trend line. All right, which also features a double break of structure. Now, using the 4 hours time frame entry, all right, entering based off the 4 hours time frame entry and the other block, this trade, by the time it gets to TP, we're looking at a 1 ratio 5.83 returns. All right, 1 ratio 5.83 risk to returns. All right, so it's about, if you risk $100, you're looking at about $583 returns. All right, but using the 5 minutes entry from the ECTs that I showed yesterday, like I said, do watch that stream. Using the ECTs on the 5 minutes time frame, this would be a 1 ratio 21.67 risk to reward trade. That means that with a $100 risk on this particular trade, by the time it gets to the take profit, we're looking at about $2,167 profit with a $100 risk. How crazy does that sound? All right. So it's all about having a solid understanding of your numbers, all right, and being able to apply your Fibonacci based on the proper market structure, find the other blocks based on the proper market structure, and at the same time ensure that your positioning, all right, where you're waiting for, you're able to find your ECT to confirm that, yes, it's time for an entry. Are you with me, guys? So right now, I'm going to take one final question. All right, I'm going to take one final question. And then once I take that question, we're going to call it a day on our live stream for today. Any questions? Any questions? Any questions? Let's get your questions, guys. Are there any questions, guys? I just want to take your questions before I call it a day. Okay, you want me to show you market ratios on gold? Well, because of the way I've worked out my Fibonacci, all right, it's more like a combination of both retracement and expansion, because expansion is used to find the target for an impulse, all right? But based on the way I use my Fibonacci retracement, it also shows me the extensions. Do you get it now? All right, level 50 on the Fibonacci retracement. I think that the only significance of level 50 is when we're talking about premium and discount zones, all right, which is an advanced concept when you start talking about smart money concepts that I really cannot explain in the next 2, 3, 5 minutes. All right, so that's basically, but level 50 for me is not as significant as those levels that I personally have tested and I personally use. All right, I want you to picture it like you're trying to shoot a catapult. All right, if you want your catapult or if you want the stone to be projected further away from you, all right, you're definitely going to need to pull back a lot further. All right, so that's the same way retracements work. In my mind, the deeper the retracement, the longer the expansion will go, the longer the impulse will go. All right, because it's like someone who has not slept in 3 days and you're asking the person to come and run a marathon race. You already know that the person cannot make it. All right, because the person has not had sufficient rest. All right, so the same way, after a hard day's work, you go home to rest so that you can do even better the next day. All right, it's the exact way retracements work. All right, it is the market taking a break so that it can perform the next day. All right, the levels for the Fibonacci, for my key levels when I'm entering based on retracements, I use 61.8, 76.4, and 88.2. All right, then for targets, all right, I use 23.6. Big man, I'm trying to remember your, yeah, the anointed trader. Good afternoon, how do you do? A retracement is a correction. Simple. A retracement is also a correction. It's just difference in nomenclature. All right. A market correcting itself is simply plotting a retracement. So 76.4, 61.8, 88.2 for targets. I use 23.6. I use 0. I use minus 0.27. I use minus 0.618. I use minus 1. So have I answered your question? How can you set your Fibonacci like mine? Well, it's part of the contents of my mentorship program, my major mentorship program. All right. I may not be able to show it here, but if you're on the Telegram group, you can just swipe through the media folders. All right. Swipe through the files, the pictures on the Telegram group. You would find it in one of the pictures. I've done the training many times on the Telegram group. I think I did it last year. I did it 2 years ago. And right now I'm doing it again this year. So just check the Telegram group. You'll find the picture that shows you the MetaTrader screenshot of how I set it, even on my phone, right? Because even the Fibonacci on my phone is set to work that way. Then someone made a comment that, Dean, yes, using the Fibonacci retracement tool seems like the easiest way of trading. Trust me, I have not shown you the easiest way of trading yet. To be very frank, all of these are just some of the basic things that I believe that I can share with you guys for free. All right. To just share with you guys for free. The easiest way of trading so far that I've ever come across is IPPS. Any day, anytime, it will be IPPS for life. All right. So if you're on this call right now, if you're on this call right now, you don't know anything about IPPS, trust me, you've not found the easiest way to trade. And the brand is not called EasyFX or Cloud, all right? It's called EasyFX because it's actually easy with EasyFX. The lazy programmer, I want to join your mentorship program. How can I? There's a link in the description that takes you directly to the Telegram group. From the Telegram group, you can chat up any of the admins. They will give you directions. Okay, in Ilorin, all right, join the Telegram group. All right, join the Telegram group, then send me a personal message. All right, let me drop a link to my personal Telegram here. All right, so you can text me on Telegram, then we'll get to talk. I'll send you the directions to our office here in Ilorin. All right, it's trust me, it's quite nice. At least I'm running this stream from our office in Ilorin right now, so we look forward to having you. We also do our programs online anyways. We also have an office in Ikeja in Lagos. All right, so IPPS, Azubike Christian, it's called IPPS, which is short for Intraday Profits Pro System. I already dropped the link. It's a comment in the chat box already. Just scroll, you'll see. So IPPS, which is short for Intraday Profits Pro System. All right. Kudus Ajala, EasyFX Academy address in Lagos is in Ikeja. All right. Oduduwa Way, GRA, Ikeja. Not very far from Cubana. It's not very far from Cubana. Along that Oduduwa Way, there's Striker, there's an embassy. I think it's Canadian embassy or so. I can't remember. Once you just come down the Oduduwa Way, I will not say the specific address, all right, because there's a public stream, all right. You can reach out. I'll tell you the address. Our office in Lagos is a very, very low key space. So I don't really talk about it a lot because it's a very low key environment. So it's in the GRA, for crying out loud. So it's not a place that I want to have so many people coming in and out of. All right. So that's why we usually just keep our Lagos address more like a secret. All right. And we only share with people who are coming for a program, coming to maybe see me or make inquiries or something, and very few appointments per week. Right. I think I take about maybe 1 or 2 appointments when I'm in Lagos. And alternatively, I take maybe 1 or 2 appointments a month when I'm not in Lagos. Sometimes I have to fly down to Lagos to have meetings in that Lagos office. I think that's all about it for today. I want to say big thank you to you guys for joining me again. This is week 3. Yeah, this is week 3 of the 12 weeks of mentorship with Adetola Freeman. Hopefully, maybe before the end of this, before the end of this series, I might give you guys a glimpse. Just show you guys a glimpse of what IPPS looks like. I do physical mentorships in Lagos from time to time. All right. Although recently I have not been able to because I'm paying more attention to, building some footprint in Kwara State. I think Kwara State is also a very nice place. Uh, Let me see. I want to see if I can show you guys a snippet of how IPPS works. Hold on, hold on, hold on, hold on, hold on, hold on. All right. So basically, um, I'm coming. Sorry. So basically, this is one of the components of IPPS. All right. You literally just plug it into your PC. You go to any time frame on any chart. All right. Any time frame on any chart. And then once you're on any time frame on any chart, what you just want to do is you typically just want to go. It's going to scan it's going to scan all the commodities on your market watch. All right. And once it scans all the commodities on your market watch, it will literally tell you which ones to trade. For example, GBP/AUD right now should be bullish. If I go to the 1 hour time frame on GBP/AUD, you most likely realize that it's bullish. Can you see? Can you see? GBP/AUD right now is bullish, and this is the other block I would have taken that trade from. So that's the other block I would have taken the trade from. Very practical, very simple, and it's based off of this scanner. Just based on this scanner. So from this scanner, I can literally know that, okay, this is what's going on. This is what's going on. It's as simple as that. It's as simple as that. So based on this now, Euro GBP should be attempting to be bearish. All right, so let's quickly check Euro GBP. Is it bearish or is it not? What do we have on Euro GBP? Okay. Euro GBP is not bearish yet, but when it gets to this supply zone, this other block, we want to check, does it have enough momentum for a reversal? And that is how simple the IPPS works. Now, the software that I'm using currently, the scanner that I'm using currently is built based on IPPS. You won't find it anywhere else. Trust me, you won't find it anywhere else. And it's one of the secrets to being able to catch massive, massive trades, all right, from the very beginning, right while it's still cooking. All right. Earlier today, AUD card rather. All right. Earlier today, AUD card gave a massive, beautiful entry, and that entry was taken based off of IPPS. All right. The IPPS scanner told me AUD card is bullish, and I just simply came to my chart, found the other block that AUD card was going to react from. All right. Found that other block, took an entry, and the rest is history. Oh, sorry, I didn't show you guys. So this was the trade, the AUD card trade that I was able to pick based off of IPPS signals, all right, from the scanner. So trust me, guys, if you're looking for the simplest or the easiest way to trade, if you're not doing IPPS, you're not doing anything, bro. You're not. But enough of the brags. All right. Thank you so much, guys, for joining. I think we've had a lot of fun. I think we've had a very nice day. All right. So I want to sign out and say thank you so much, guys, for joining me once again on week 3 out of the 12 weeks mentorship. We have about 9 more weeks to go, and I can promise you that those 9 weeks are also going to be value packed, and you don't want to miss it. All right. Without further ado, thank you so much. God bless you. Have a fantastic and profitable rest of the trading week. God bless you, and bye-bye.